Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everybody. It is February 21st. Hope your morning is going great. We got a couple items here on the economic calendar, so let's just jump ahead. We'll start off with the market manufacturing PMI for the month of February. So our previous reporting came out at 51.9, and February it dipped down to 50.8. So on these two indexes for the markets, services and manufacturing, anything above 50 is considered option or optimism or expansion. And of course, we kind of dipped, so we're kind of on that verge of going into a contraction or more negative mode here. However, services went from a positive at 53.4 previous reading down to a negative to 49.4. So obviously, this is kind of showing things are slowing down in both marketing and services and manufacturing. Now, existing home sales also had a little bit of dip, but as you can see here in December, it was at 5.54 million annualized units. Forecast is actually accounting for 5.39, and it came in higher than forecast, but still lower at 5.46 million annualized units. Now, existing home sales is kind of a conundrum. We have the demand, but we just don't have the supply. Inventory levels are quite low right now. We're down to just over a 3 month supply right now, and that kind of tells you the levels there. So if we had more homes, you would see these up much higher. Unfortunately, due to inventory levels, these numbers can be a little misleading right now. So but because we do have the tight inventories, it's also pushing home prices up. So those who have homes are benefiting in the sense that their home values are going rising, and of course, their net worth goes up as well. So let's see how this is playing out on the headline news. So the market news, market PMI news, obviously is helping with this bringing the stocks down, but the bigger factor probably is more or less the coronavirus. Now, the tech sector is taking the biggest hit on this, primarily because of technology, because of the supply chain that we see in Asia, and this is obviously going to affect that in a much more negative pattern with what's going on in China. And you're seeing fewer and fewer ships leaving China right now just to try to contain uh, the coronavirus. And you're seeing more countries around China, like Tokyo or Japan and Korea, taking more precautions as it's hitting them a bit more as well. And World Health Organization kind of released their reports where approximately 77,000 people now that have been infected, and just under 2,500 people who have, I'm sorry, 2,250, I think it is, 2,250 I believe is the number who have passed so far. So thoughts and prayers with those who have been affected with it. And again, we hope this we see the light at the end of the tunnel on this coming soon. Uh, so let's move on and see how this is playing out in the bond market. Bond market is up about 8 basis points, which translate, well, finally to better pricing, right? So about 2 weeks here, we've been going the sideways pattern really, and haven't really been seeing enough of a pattern going upwards or downwards to get really any movement in rates. So today we're getting that. Um, so we're getting a bit of a boost and heading towards the ceiling here at the 102.34. So we got some room there, but we got some slight improvement in our pricing today. Finally, some movement after about 2 weeks of just kind of unchanged, stagnant movement in our rates. Of course, it's better going upwards than I'd rather say it's stagnant than going downwards, right? Huge broke right through two layers here, and we're heading down to the third layer here, which is at the 2.14 um, level here on the 10-year Treasury. So we're at some pretty low levels right now. We're down to about 1.46. Um, yeah, 1.46 level here. So we could be hitting this 1.43 level here very, very quickly, and then even below that. So this is hitting us pretty hard right now and creating less pressure on bonds, which is helping bonds out. So again, mortgage rates are with a slight improvement today, which is good news for those who are looking to buy or refinance. And so speaking of such, if you guys are in California and looking to buy or refinance, please reach out. We'd love to be able to help you guys out uh, with your needs. Direct message me or email me the best way to reach me. My name is Mike Bjork, and I'm with Pinnacle Home Loan. And this is my email address right here. I do get the quickest response will be via email. Direct messages, I do get them, but maybe a little bit slow on getting those messages. Um, So you guys enjoy the rest of your day, enjoy your weekend, and we'll catch you on Monday's video. Thanks for watching. Bye-bye.